Hi, welcome to the Market Alert for Friday, 26th of October 2018. So the pound yesterday sailing lower, right down towards the 127.85 that we drew in yesterday. It comes off this level, already taking out the one across here, but finding a bit of support there at the moment. In fact, let me just draw that one in because it's quite subtle. The market tested here, we can see the blue bar. So yeah, both of these bars at the moment currently above the 128.10 level there. So an important level for the pound at this area. On an intraday basis, well, overnight, while we're here, we can see the market's very quiet. I mean, that was apparent with the lack of activity in the overnight price movement in the daily chart. And then you can see yesterday's market starting off quiet. Then Draghi opened his mouth and said he was going to stop printing QE December of this year. And it's going to be interesting to see how Europe gets on after that, I'll tell you now. With the Italian banking problems, and they're not going to actually help Italy either, because the government is more centrist than it is left-wing. And obviously they don't want to toe the line like everybody else has done, cap in hand, and so they're going to make them suffer a bit. So it's certainly going to be interesting going forward, that's for sure. But here you can see that the market, once it eventually broke convincingly both averages, then the market just sailed south, and obviously dollar strength as well, the opposite of this. Looks like Super Mario's out again today at 3 p.m. and we just got the advanced GDP. Again, you take no notice of these figures now. I mean, the market doesn't really react to them or to the central bankers either, because it's just a one-way bet as a rule with the stock markets, and that's just to buy the dips. But that said, of course, at the moment, nobody wants to buy the dip. I mean, this is the Dow. And yeah, we're continuing to show weakness in this market, having broken the 76% retracement and the 200 bar moving average. The low of 24,529 is broken, then we're heading down to this level, which is going to be the 23,989 level going forward. But in the grand scheme of things, this really is no move to the downside. Let me just create a weekly chart and a monthly chart just to show you how little this correction is at the moment. Okay, so here we have a weekly chart. You see this here. We double topped, and now the market moving lower. And now we can see the bigger picture. Let me just reset this chart so we can just do a bit more analysis here. So we've got the market having moved up and now retracing. We've got all of these lows across here that go back to January of this year, where the market could go to. We're also below the 20 and the 50 bar moving average as well. So let's just draw in a few of these lines. This is sort of the major spikes to the downside, and then we've got this level here back to January, which was 23,109. And also let's have a throw in a few 76% retracements. We're probably through this one, bang on it at the moment. So this one's important, 24,700. If this one breaks, then we move to this one here and draw this one in. Let me just get rid of a few of these for a minute. I'm going to be overwhelmed by too many. So we'll go from here to here, and again you can see there. So we'll leave that marked up like that for the moment. But what's interesting here, for those who will have spotted it, we're actually below the 50 bar moving average when we've only approached it before. So very interesting picture there. It's a case of when will the Fed actually come and help bail out the market. So this is the monthly chart. We can see the crisis of 2008, and it's just vertical. Thereafter we've got Trump getting in In this area here, you can see there's November. That was his Congress thing in December of 16, and the market has just been all the way up since then. We've not come back to the 20-bar moving average since 2015, and it looks like we're heading back towards us now in the bigger time frame. Volume's massive as well. So yeah, an very interesting picture here. So it's nice sometimes. Well, these time frames are my favorite time frames because you get a full understanding of where the market is. If you were just looking at a 5-minute chart, yesterday's price action, you have no idea where you are. You know, yes, the market's gone up, there's been a few trades or whatever, but when you step back and you see these charts, you realize exactly where you are, how overvalued the market is, what's likely to happen if they don't intervene and support it and manipulate it. Yeah, great time scales these are, weeklies, monthlies. How you find the trading opportunities like silver, you look at that at the moment, that's coiling as well. And speaking of markets coiling, Bitcoin continues to do this, and say it's not really point focusing too much attention on this because it isn't doing a fat lot at the moment. So just to summarize then, pound, watch the levels in the pound, just to remind you again, down at the 128 level, and then in the Dow we've got the bigger time frames in here as well at the moment, but in the daily chart we're looking for the market to take out the 24,529. 76 is holding at the moment as well at 24,700, so keep an eye on this. And then Bitcoin, not a lot to report there at all. Okay, that will do it for this one. If there's anything to report, I will let you know, but other than that, as ever, thanks for watching. See you in the next